Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance within yesterday's range and did so on below average volume. And at this point, heading into the open, the bias is fairly neutral. We can still get a short-term directional push in either direction. Holding above 07 to 09 would tell us that there's at least potential for buyers to step in, and we're using the 03 to 05 as a bull bear zone. So as long as we hold above that zone, and especially above pre-market support, there's still a chance for buyers to be active in this market. On the upside, the main inflection point is 16.5 to 18.5, and if we take that out, then most likely ES will go up and test yesterday's high at 23 quarter, and then the 26 quarter to 27 quarter resistance, and possibly 28.75 to 30.75, where responsive sellers can again be active and we can start balancing in a range again. On the downside, a break below 07 to 09 would be a early warning sign that sellers could be taking over, and a break below 03 to 05 would confirm the sell side in short-term control and bring yesterday's low at 97.5 and the 93.5 to 95.5 initial support zone into play. Now, we don't really have any major economic catalyst on the calendar this morning, and if volume continues to be relatively light, then the market could simply continue balancing within a range, as in we don't have to make necessarily a big directional push either way. So the idea is that even if we break out above 16.5 to 18.5, the sellers can still shut off the upside by 26 quarter to 27 quarter or 28.75 to 30.75. And on the downside, a break below 07 to 09, and especially the 05 prior VPOC would definitely indicate that the sell side is more dominant, but we don't necessarily have to completely liquidate. We can still find buyers at 93.5 to 95.5, or in the event of a bit of a range extension, perhaps 88 to 90, and then start balancing within a range, because the next main inflection point, or the next catalyst, I should say, is the ECB decision due tomorrow morning. So, today could be a bit of the same as yesterday, where the market just continues to balance within a wider range, and perhaps we have to push a little bit lower this time to attract responsive buyers. But overall, if the volume continues to be relatively light, and there's not really any big catalyst anyway, then the default expectation is for the market to just continue essentially just balancing within a range, and then tomorrow we can get a bigger directional move off of the ECB announcement in the morning. So those are really the main thoughts heading into the open. On a balanced session, you do want to be careful with continuation setups. Ideally, if there is let's say a breakdown below 05 or 07 to 09, and there are enough signs pointing to further weakness and continuation, you want to get on board pretty early on in the move. If you're late to the move, then it could actually be ending, and we can get rotation and a counter trend bounce, and you don't want to get caught up in that. So you want to focus on either getting involved in a directional push early in the move, or stepping aside and then fading a range extension at the next support zone or the next resistance zone, right? And similar idea on the upside. If you can get involved early enough, then the long side could be pretty good. At 16.5 to 18.5, there can still be some resistance. If the market sets up for a breakout above 16.5 to 18.5, again, you're going to want to get involved early in that push, right? Early on that breakout, because if you're getting in too late, let's say, above 23 quarter, there may not be enough left in that trade, because we don't necessarily have to break above this entire recent balance, right? We don't have to necessarily have a sustained breakout today above 28.75 to 30.75. So we could just go up there, reject, and then balance yet again, right? Perhaps above the 16.5 to 18.5 zone. And then on the downside, if we break down Again, we don't have to go all the way down to the bottom of balance. We could just go down to 93.5, 95.5, or 88 to 90, and then start balancing within a range. So, heading into the open, the bias is neutral or, very cautiously bullish above '07 to '09. But overall, you want to be fairly selective in this type of market because it can be very two-sided. And because it can be two-sided, you also want to, take your exit and exit at your first inflection point or profit target instead of really pressing for a big move. And again, these are all pre-market thoughts heading into the open. If volume really comes into the market and we start seeing big volatility, then we're going to adjust that, right? We are going to take that real-time data into account and make adjustments. But given the overall context heading into the day, those are really the main ideas. So, heading into the open, let's see if we can actually hold '07 to '09. Holding above that would tell us that, again, we can test 16.5 to 18.5. That's the primary inflection point on the upside. If we take that out, that would confirm buyers in control, bring 23 quarter and 26 quarter, 27 quarter into play. Possibility of testing 28.75 to 30.75. And again, that's a spot where ES can still attract responsive sellers and then just balance above 16.5 to 18.5. So those are the main thoughts. Let's see if the buyers can hold it up this morning, and we'll take it from there.